Geopolitical. So that's a big topic, obviously, at the moment with the recent US elections and Donald Trump as the threat of trade tariffs. The sector we specialise in is last mile and light industrial, and the majority of our tenants in the UK are SME. So the effect of the geopolitical is less direct, say in terms of the tariffs, and more indirect to them. But the important thing is the tenant base is incredibly resilient and has consistently demonstrated its resilience during the global financial crisis, where it had the lowest delinquency rate of any asset class, during the UK referendum on Brexit, during COVID, we had 98% rent collection consistently in all of these, and that was also carried through into the recent high interest rate environment. And also we have the lowest delinquency of tenants in any real estate sector. So I see them as they are incredibly resilient. And coupled with that, we have a chronic supply-demand imbalance where there's a chronic lack of stock, and we have a continually expanding tenant base with the growth of the SME sector. So in terms of short-term fluctuations, the most relevant one being the recent the drop in valuations of between 15 to 25% in recent years since the Liz Truss budget experience. And that has in one way presented an opportunity of repricing. But in terms of the asset management strategies, for us in this sector, the key asset management strategy is all about the rental reversion. And so with us, we focus on capturing that through when we look at assets, when we're looking to acquire assets, we're looking for those that are under rented. We've got 20 years worth of data that we use to analyze the market. We do detailed due diligence on assets we buy using AI to look at the availability and take up in the location. And we're all confident of where we set the rental levels, that we will exceed the average rental growth of 4%, which we've consistently delivered, and we consistently outperform the MSCI Industrial Index. In terms of tenant requirements, I wouldn't necessarily say they've greatly evolved compared to, say, the big box logistics sector, which are probably far more the subject of automation within their facilities. What the evolution in our sector is the actual type of tenant. What we've seen over the last 10, 15 years is a move from what we call low value tenants, which would be, say, car bodywork repair shops, to higher value tenants, which would be, say, trade counter, wholesale, and more business to consumer. And if you look at the average MLI portfolio over 10 years, the balance has gone from 10 years ago, it would have been 60% would have been low value, 30% high value. That is now completely the inverse.